Hello, howdy. It must be Friday because I'm wearing my Yoda shirt. So, Rob Morales, RCO Network, coming at you live here on Finance Friday. Talking about money, talking about things you got going on in life. So, what the HE double hockey stick is going on right now? Because I have zero money in my account and I'm kind of stressing and worried, and maybe I'm feeling a little anxious. But that's what we're here to talk about. So, with me as always, or sometimes intermittently, Finance Ready Frank. Hello, sir.
Hello, hello. Hey, two quick comments. First of all, that opening scene is getting longer and longer, it seems like. I don't know what's going on.
We're trying to kick up things a little bit here. I
guess.
Mr. Francisco. Hi. Go ahead.
Yes, thank you. Thank you for having me again. Another thing, it doesn't have to be that way, Robert. You don't have to stress about money, man.
I'm always going to be stressing about money.
You're complicating your life.
Yes, I know. But also joining us too is Senor Satoshi himself from Sacramento, Sacramento Satoshi. If you have been on the website lately, sir, you've established a new crypto corner section in our network page, CEO network page.
Yeah, join the network, right? Part of the discussion.
So if you have logged into RCO Network, if you remember, then you see that Mr. Satoshi, I created it for him, to be fair. It's Crypto Corner.
Oh, nice.
You can hear and embrace and enjoy crypto to your leisure every day with the Satoshi. So welcome all. We're here.
It's not like if we don't hear enough about it everywhere else, right? Now we need it on our CEO network too.
You don't have no one's forced to join. It's only by free will. So.
That's true.
So what the hell's going on? I mean, the stocks are down. They've been down. We haven't been on the show for a couple weeks, and I brought it up as an issue because I've been down. You know, a lot of what we're doing here at CEO Network is kind of along my journey and kind of what I've experienced. And you know, I was all like going hard on investing, buying stocks, and all of a sudden there's a big crash. At least in my portfolio, I'm lost in a couple stocks. I've lost about 30, 40, and one that I saw this morning, 45%. And it gets you down, and you really don't kind of connect with that. And it's kind of disappointing. And like I said, I've shared with those moments where I think everybody wants that water cooler moment, like to go up to Frank and be like, you know what, Frank, shit, I invested in gold, and look at how much money I've made. And you stupid Bitcoin, Henry. Then it sucks, you know, whatever. You know, so we all want those moments, but then when it's bad, it's like, oh, I don't want to talk about it. Like nobody's talking about it. Especially Bitcoin. I haven't seen as many ads for Bitcoin. I mean, there's some hodlers. So, but, you know, sharing that sentiment. Frank, do you fill in a little bit there? You've been doing it longer than I have.
Yeah. So a couple things. First of all, I think everybody kind of goes through that, right? The emotions. So we talked about how investing is very emotional. It does drive that. But it depends on when you look at it. So for example, my portfolio is lower than what it was at the beginning of the year for sure, but I'm still way up, you know, because I'm a long-term investor. So I'm not doing the daily, you know, or weekly trading. And so my investment is still way up. And that's what happens when you are a long-term investor, right? You'll have these periods, we're down 10% now. Yeah, but I mean, we've had last year we were up almost 30%, and the year before that, and then the year before that. And so we had a lot of years of gains. So this is just a little blip that I'm using to buy some more. You know, we kind of cashed out a little bit there at the end of last year, and now I'm using this opportunity to buy some more.
Yeah, and you could fill in too, Henry, but so like talking about buying the dip, right? So there was a couple moments there in January where things were falling, and I'm like, okay, so one of the stocks I bought was Square, and I think I bought it at about $180 a share, and I'm like, okay, cool, we've hit a dip, I got it at a good price, and then since then it's been about 3 or 4 weeks, it's just been falling, and now it's down. That's my worst stock right now. I'm down 45% on that. And now it's trading at about $100 a share. So I've lost about $80 a share just on that one stock. Henry?
Well, I think just in short, the market doesn't like uncertainty. When there's uncertainty, you get volatility. So that's just how to summarize it. And the Fed has been kind of saying like, okay, they've been pretty good at telegraphing like what they're going to do, and they're saying, okay, we've known inflation is a big issue, but now it's pretty much people are seeing it. When they go out to eat, when they go to the grocery store, that
Yeah,
kind of stuff.
especially. Yeah.
So people get upset. They're like, why are things going up? And as the case is, salaries don't always increase as fast as goods and services do. So then people just feel poorer in general. So the Fed is kind of stuck in this position where they really need to raise rates. You got to remember, over the last 2 years, especially since COVID, they've just been printing money. And so when you have this liquidity, then everything in the market tends to go up, and that's why you kind of see people like what you're talking about, the water cooler moment. Hey, I bought this, it went up. I bought this, I went up. Well, when they, going forward, if they're going to take that away, and then you need to get back to what's more a normal market, which the markets don't always just keep going up no matter what. And so that's kind of what's happening now. Everything's kind of getting repriced, but they're kind of stuck in a situation where they need to raise interest rates. They need to slow inflation down. But again, like we've talked before, they have so much debt. And so you would think like, okay, inflation is 7% is what they admit. So probably it's more like 10, 15, right? So why haven't they raised rates? If that's what they need to do.
Well, I think
they have so much debt. It's every time they raise rates, they shoot themselves in the foot. And so they have to play this thing where they have to say, okay, we're going to raise rates. We're thinking about it probably in the next meeting. And so then the market is forward looking, and they decide like, okay, so we need to get rid of the riskier assets, so the things that aren't making money. So everybody's very short term.
You talking about Square? Is that are you saying I should get rid of it? I probably should have sold it a while ago, but for some reason I'm like holding on to it.
I like Square. I think Square is a $300 stock, but the thing is like people don't want to, they don't want to wait around. They're just looking at the short term. They're looking at, especially now. So you had the whole Fed thing, and then now you're looking at like geopolitical issues like Russia invading Ukraine. Okay, war is not a good, in general, not a good thing for the market short term. But like Frank says, over time you look for opportunities and to put money in when you get these pullbacks.
Yeah. This is a time where you separate the men from the boys. When people no, seriously, like for the last couple of years, it's been all up and up, right? And everybody was making money. And if you could fog a mirror, you could make money in the market. It was a piece of cake, dude. But now when things are going down, and people that did buy recently and they are down in their positions, the question becomes, are you going to stay in, right? Are you going to double in? Are you going to keep on, have that mentality that you had a year ago when, you said you were going to invest and you're going to ride it through, or are you going to get scared away? And the selling that's going on is because people don't have that fortitude, right? They don't have the fortitude to kind of go through with a downturn, right? It's just they see they're down whatever it is on their portfolio, the last year, 40%, 50% or whatever on some of these stocks, because they did get very aggressive, right? They bought the ARK innovation funds and the Teslas and the Facebooks and all that stuff, right? Yeah. That's been taking a beating recently, right? And so Palantir, I know you're a big fan of.
I like my Palantir still.
I don't know if you're still holding it or not, but anyway, so
I'm holding on for dear life on that one.
Okay, well, we'll see, man.
I'll pull that one up too.
If it dips another 20%, we'll see what you think then.
I'll be crying, but I'll still be holding. All
right.
I might buy some more.
So a lot of those ARK stocks, I mean, they're good companies. They're just ahead of their. They'll be good companies in the future, but like I said, people right now aren't willing to wait for that future income. They rather take their money off the table and try to put it in something safer. But the question is like, well, what's safer?
Well, I think it goes back down to sentiment, right? I want to feel like, hey, I'm making money. I want to feel like it's getting me somewhere. And if I see it losing, if I see it going negative, then I get scared and pull it. It's just, I think that's how we're built. We put our things in like some sort of basket, a safe haven. And if it's threatened in any way, if it looks scary in any way, just go pull it and then go put it somewhere else, which is commonly a bank account. And but that goes back into sentiment. Like, you have to really, if you're invested in a company, you invest in it regardless of the stock price, because you're in it for the long term. But so much of us want, again, that water cooler moment. And it's exciting. I know that you were an archer. You were on the arc, Henry, for a while. I don't know if Kathy Woods was necessarily the best person to follow, and I kind of doubted her, but that was just my opinion. But you haven't really talked about her in a while, and then I think that goes back to the same thing that I was feeling. Is like, I didn't really want to talk about stocks for a couple weeks there because I'm like, shit, everything's down. What value am I bringing, especially to the show, if my stocks are down? I don't have. What am I teaching? What am I showing? So I'm today is about vulnerability. So I guess that's really what today's about.
Well,
and admitting I screwed up.
You always have to be ready to change, because with the changing environment. And so, I mean, I'll admit, like, probably just like you really try not to be emotional, and I really try to be disciplined. And again, like, just so I'm talking, I have my 3 baskets. I have my real estate, and nothing has changed there. I haven't purchased any real estate. I would like to purchase some, but I'm just waiting maybe for something to come along that I like. And then I have my second basket is just dollar cost averaging into an S&P index. That hasn't changed. And going forward, if the market goes down or the market goes up, I'm just dollar cost averaging. And the reason people do that is take kind of the emotion out of it, so they don't have to feel like, oh, am I up and like that? I'm just buying all along the way. And then my third basket is where I buy my more risky individual kind of things. And my discipline has always been to try to be focused and maybe keep a small number of stocks that I think will go in the future, that will be big in the future. And probably, just like everybody else, with a little bit of emotion, maybe I bought a little bit of Palantir and I bought a little bit of these to do a little bit of gambling. But when the sentiment or the environment changes, when it's like, okay, free money is going to be gone, interest rates might go up, there's a lot of uncertainty, then for me, at least the last few months, I've been looking at those individual things and looking at, like, okay, what's creating revenue? Okay, if the company is not creating any revenue, then as you can see, like, some of the ARC stuff hasn't done well. And are they growing? And then can I buy it on a dip? And so the big one for me is, like, so for example, Tesla's become cash positives since 2019. The revenue continues to grow. And we were talking about the stock, I think back on the show somewhere, it was like right around, I don't know, 1100.
Oh, way up here,
saying that, I want to buy this stock. I'm a believer in the company, but to be a disciplined investor, I have to make decisions based on where I think, is a good price for the stock. And I felt like in the 850s was good. And I remember you saying, like, well, yeah, everybody would like to buy it. Well, now we're there. So that's what I'm doing. And so I make a plan, and then I just go through with it. Because for me, I want to accumulate. Tesla is one of my top 5. Okay, so I want to accumulate as much of this as I can. So I'm going to use the dips to buy. And if I don't, I'm either going to, take cash from the riskier things that I started doing at the end of the year and the beginning of this year, or look at my other positions and say, like, okay, I have money in Starbucks and I've made, a few $1,000s, maybe to take some of the money out of there. Because going forward, what's going to grow more, Starbucks or Tesla? And that's basically what it is. Like, going forward, what's going to give you the better growth?
Well, I mean, people keep buying Starbucks. I don't know as easy as it is to buy a Tesla. No, so like, and Frank, I was going to ask you, and you can fill in, you can answer whatever you're going to ask. So is that kind of like a rite of passage for me, Frank? Is like, somebody like me has to go through this process where, you go blow some money, and I wouldn't say blow it, but you buy stocks and it's a learning process. And because you want to go on your own, at least for me, I want to go on my own, try to figure out this whole, I would swing trading is really what it is. So you go in there and swing trade and try to make some quick cash, and then fall on your feet. I mean, I'm not completely fall on my feet, because I did hodl on my Barrick's Gold, and it is up now 7%. And I was beating myself up for holding on to that shit for so long. And now it's like up. I'm like, Damn it, I was half right because the other gold mining stock sucks.
Right.
But anyway, is that like a rite of passage?
No, it doesn't have to be that way. Like I said, you said you were worried about this stuff earlier, and it doesn't have to be that way for most people. I mean, I'll go back to kind of what Satoshi said. Is that I like two of his three buckets for sure. You know, the real estate and the dollar cost averaging for the S&P. I think that is something that everybody can do. Real estate, obviously, you know, you need more cash to be able to purchase something.
Yeah, especially now.
Dollar cost averaging into the S&P, yeah, right. And so the third bucket of play money, I think, you know, if you are interested, yeah, there's something that you can do there. For most people, they don't have the time, they don't have the patience, they don't want to. You, Robert, are interested in it. You want to kind of learn and stuff like that, and by all means, you know, do it as long as you know how much you can afford to lose. What percent of your liquidity, what percent of your net worth, what percent of all these other metrics that third bucket is, right? The speculative bucket.
Yeah.
Now, once you start comparing your S&P 500 bucket and your speculative bucket, for most people, the vast majority of them, in the long run, they're going to do worse in the speculative bucket than they did in the S&P, that they're just dollar cost averaging. Because the S&P is going to return a certain percent, and these people are, you know, going in and out, selling at the wrong time, buying at the wrong time, and so just the history has shown, data has shown that most people don't beat the market, right? Not even the professionals, right? Not even the mutual fund money managers beat the S&P 500 the majority of the time. How can you expect somebody that doesn't have the time, that is not, you know, this is not their full-time job, to be able to do any better? Right. And so if you want to, you know, do a little speculation, that's fine, as long as you're very careful on not going overboard in that stuff. But yeah, I mean, you'll see that for most people, they're not gonna do better in the speculative bucket. So why even do it? Why not just keep on putting the dollar cost averaging in the S&P and let the market do its stuff, and you go have a beer somewhere. Let's see what Satoshi says.
So before Satoshi says this, we're not, Frank is a financial planner, but not on the show. We're just entertainment, and we're only bringing you information that will help you through our experiences. And so if you have any comments or questions, go and drop those in. But everybody has opinions, and you know, everybody has a different direction. And I think a vast majority of us are pretty ignorant when it comes to that. I know I am in a lot of areas. But again, we're hoping to kind of mend that and bring that together in the show. But sir, go ahead with your hand raising.
Well, just to talk about, like you were saying, is it a rite of passage? I don't know if it's a rite of passage, but I feel like a lot of the new investors or people that haven't traded in the past usually come in the FOMO times, right? They don't come in when the stocks are down. They come in like you're saying, I'm at the water cooler, this guy's telling me he's making this and making that, and I think I want to make that too. And so that's why you get a lot of people coming in at when things are kind of like FOMO evaluations, I guess. And and then they get burned a little bit, and then you'll see people like, oh yeah, the stock market is way too risky. I will never do that. So that is true. But again, it's also, and I probably kind of did the same thing. I really started investing heavily, like in individual stuff, probably like 2007. And if you remember, in 2008, 2009, it's like, okay, the whole stock market dropped, and I'm like, oh, what an idiot I am, blah blah blah. But with time, that's what you need for the investment to do well. And then the other thing is, so I agree. You have to put one of the lessons that you should learn, hopefully, Robert, with this experience, is that you know, I don't just like pick something because this girl told me this is going to be really good, and I've never even heard of it. Oh, there's this guy said this IPO is going to go through the roof. So hopefully the lesson is that maybe I need to do a little more research than this guy told me, or this is how I feel, and kind of have like a reason why you're investing in something. And then the only other thing that I would say is, so people ask, well, why do you want to do individual stocks? And the reason is because if you look at the S&P over the last 10 years,
Okay.
of those 500 companies, a majority of the gains went really to the top 10 companies, right? So if you had just bought those 10 companies versus the S&P, you would have done significantly better. So the big theory is that diversity and dollar cost averaging is going to help protect you. But you remember when you're buying the S&P, you're buying maybe 400 companies that aren't really doing that well, especially in a high interest rate or high inflation like we're having right now, right? So really, if you look at the people who became ultra rich they bought individual names. So like the Jeff Bezos, the Zuckerbergs, the Elon Musks, they weren't diversified in like a bunch. They just had companies that did well. So the question going forward is, for the next 10 years, who are those 10 companies going to be? And so that's the work that you have to do to going forward and to get outsized returns versus just a regular average return of an S&P.
Well, I do agree with that, but then somebody like me who's caught up, I'm trying to do two businesses here, and most people only go to work 9 to 5. And so I have very limited time to look into it. And sometimes, I just go with the rumor, right? You buy the rumor, sell the news. But, so I try to go with the rumors and try to follow things, but I'm so preoccupied on the other things that I'm trying to do, which if there was any financial advice I would ever give is start a business, and you'll see why. That's just, if there is a financial thing, just start a business. There's a lot of things that benefit from it. But I have two things going on, and I think I'm like a majority of people where I'm caught up in life. You just got married, got a house, which I have stopped investing in stocks to put towards the house, which is a whole other investment and a whole other thing in time. Like I got scratches on my face and stuff. But, so I'm reacquisitioning all my money into that. And so I feel like I want to be more invested in understanding a lot of the companies. I want to pick the right ones, quote unquote, but I don't have the time, and is there something that I can do, somebody like me in my situation, is there something I could do to find more information or, maybe listen to somebody more than another? Is there something that's suggestive that I can follow or at least read about that would give me better advice that way? Besides, signing up with Frank in the college group.
That's right. Yeah. And then you have to worry about anything. But look, so this is what I'll say about investing in individual companies. So you have the people that, as you guys just mentioned, the people that just basically hear something somewhere in the news or a friend or something, and they blindly go into the company, right? There's a bunch of those people buying that stock. And then there's people that do more research. And then there's people still that do even more research and more research. And then you got professionals that follow the company exclusively or follow the sector exclusively. And then you have the real insiders that are talking with the companies. Let's just pick Palantir.
Nancy Pelosi.
Or whatever company you guys, the
insider,
the inside people, or the people, whatever company it is, Peloton, that they're talking with the suppliers, that they're talking with the customers, that they're talking with the board of directors, that they're talking with the big purchase order people. You have all these people that have so much information, okay, and you get all these millions of people throughout the world making a decision about what is the value of Peloton right now. Okay, and do you have Peloton up there? Let's see where it says probably like at 20 bucks.
I'll pull it up.
Okay, well, anyways, it's about 20 some bucks probably after going to 120 something. And so right now, that is what the millions of people. What is it at? 30
bucks.
That is what the millions of people right now agree that that's the price. And that is the price based on all the forward-looking assumptions, okay? The market knows that interest rates are going up. The market knows that we might be heading into a war. The market knows that, it's not like if we know it and nobody else knows it, okay? Everybody knows this, and some people know it better than others, right? And so for us to think that I have more information than everybody else, and that's why I'm going to make money on this, it's like, to me, it just doesn't make sense, right? That is the market price that based on all the everything that has happened to Peloton and everything that is going to happen, that we think is going to happen based on the assumptions of millions and millions of people, That's the price right now. Who's to argue that it's not, right? Who's to argue that said no, this stock should be worth $100 because it was worth $100 a couple months ago? Well, I mean, you're one fish and millions of other with competing with millions of other fish, and so that's what people don't understand is that you don't have the right information, right? You don't have the insider exclusive information that's going to make you rich on this stuff. So, anyway, you could get it right. I'm not saying that you make a bet on something and it's going to go up and stuff like that, but to do it consistently over and over and over, year after year, you're not. You're gonna lag. You're gonna lag. Just like GE was a most valuable company in the world for many years. Look at it now, right? It's a relic at this point.
Yeah, and I will say, for me, you know, I just want to make better decisions for myself. One, and be as informed as I can, and I think a lot of the times that we select those companies and have that water cooler moment, it's purely by accident more than it really is intentional. You know, so I hope that people kind of take that away. And that's been my experience. You know, when somebody comes up to you and says, "Oh my God, you should have invested in XYZ account or XYZ company and bought 50 shares of stock." Look at my portfolio now, which is all the Shiba millionaires that were like in the market about a year ago. You know, I think it was purely by accident more than it was intentional. You know, and for me, I want to be more intentional. And as we wrap up the show today, because we got about 2 minutes left, guys, it just goes that quick.
I would add for you, Robert. I mean, the basic question you were asking is like, okay, I don't have enough time. I got this and I got business. You don't have to. Nobody's forcing you to go and buy these individual stocks.
Yeah, but I want to. I want to make money, buddy.
It's like saying, okay, I want to run an Ironman, but I don't have time to train and do all the stuff. It's like, okay, well, you can desire whatever you want, but how are you going to make that happen?
I start a podcast about finances, Henry. That's how you make this happen.
Two things, Robert. First of all, if you want to make money, go sell real estate. That's the way you're going to make money. Okay, that's what you do. You're very good at it. That's what you should be focusing on.
Check.
Okay, and yes, check. And the other thing is, remember, money is just a tool, man. Money is just a tool. Don't focus on the money. Focus on your life. Focus on your beautiful wife. Focus on everything else, and let the money do what it's going to do. Okay, let me say something real quick before, because I guess we're gonna end it here. So
we're wrapping up.
This is something that I kind of try to tell our clients, right? In life, in the markets, in finance, whatever, right? Remember those Venn diagrams from math class? Remember what those are? Venn diagrams?
Was that Mr. Stanley? Remember Mr. Stanley?
Probably the Venn diagrams are like the two little circles, you know.
Oh,
and there's two little circles that overlap, and there's this stuff in the middle. Okay, This circle here is things that matter, right? Things that are important, things that matter. This circle here is things you can control. Okay, focus on that little intersection, the things that matter and the things you can control. That's where you should be 100% of the time. You can't control the markets. Okay, they matter for sure, but you can't control them.
Well, that's like spouses, right? So I mean, like they matter, but you can't control them. So.
Well, that's true. So maybe we should not have spouses, but anyways, as far as investing, that's what you should be focusing on the things you can control, which is the saving, how much you're saving, how you're investing, if you're diversified, if you're, that type of stuff, if you're not living below your means and stuff like that. That's what you can control, right? You cannot control the markets and the things that matter, right? Which is, finding out what a good life means for you and focusing on that.
And so as we're wrapping up the show today, I do want to contribute at least 30 seconds, and I really mean 30 seconds, Satoshi, to Bitcoin. Because I know it's on top of mind. Is there anything Bitcoin related that we need to address and provide to our audience right now?
Well, I'm not like I guess I've become like
you are the Bitcoin person
every time. No, it's I sent you, what was the
oh boy,
put up the thing of the Bitcoin cycles, I guess. I think I sent you that earlier this week.
This thing?
No.
Okay.
Bitcoin.
This thing?
Here we go, charting.
There we go.
So this is just a chart of the Bitcoin cycle. So the pink one, actually the yellow one there is kind of like a half cycle. Then you have the pink, which was the one that was started and I don't have the exact date. Sorry, I didn't know you were going to do this, Robert. And then the others is the cycle that was started in, I believe, 2017, and then the orange one is kind of currently where we are right now. So again, it's hard to come on every week. Oh, hey, what's happening with Bitcoin? Oh, it's up. Okay, and what now? It's down. It's up. It's down. You're looking at a long-term trend, okay? And you can look at or let me just bring up the chart. You can look at the previous cycles where you had like 100 times 100x on the valuation, and then you had 30x, and we're currently somewhere around like 5x. So where is it going to do in the future? I mean, I have no idea, but it's going to be more than 5x. Okay, it's not going to be the 100 or whatever. All you're looking at is adoption. Okay, are people using it or not? And are countries making it legal tender? You see that occurring. I think Ukraine just made it legal tender yesterday. Russia was last week, and for me, it's just inevitable that eventually it will be legal around the world. People will use it. Okay, either they won't or they will.
No, well, okay. So the only concern I have, and it was only really 30 seconds. The concern I have is that the government will heavily regulate it or tax it like crazy, and then force everybody in some way to use the Fed coin or whatever, and make it more incentivized to where they can. It's the people in control. So I do like the aspects that Bitcoin has, is where it's unregulated, and it's it's the interface of it, I guess, the usability, where you can't just replicate it, and the value of it only increases. I believe in it. I just don't know where the future of it is.
Taxation. So the nice thing about Bitcoin,
yes, sir,
is it's not like real estate. Okay, it's real estate. The government is going to tax you. They need money. I don't know if you know this. Okay. Straightforward is for increased real estate taxes. Okay, the benefit of Bitcoin is that if they decide, okay, I'm going to tax it, I'm going to do this, then you can move it or move somewhere where they don't have taxation. So you can go anywhere where they don't tax it.
Man, you are turning into Jeff Bezos.
It would be more difficult for them to tax your Bitcoin than it would be your house, because your house, you got to sell it and have those considerations. As far as regulation, yes. So regulation is probably the biggest overhang on crypto right now. But they are really going after the stablecoin market, okay? Because that's what they want control. They don't want like just an anonymous stablecoin to take over. They want a U.S. dollar stablecoin, okay? But that has nothing to do with Bitcoin, because Bitcoin is a store of value. A stablecoin is just a medium of exchange. So the U.S. doesn't want like some Tether or whatever, Terra Luna or whatever other stable coin to take over. They're going to want to regulate it because they want to introduce their US dollar stable coin, just like China. China doesn't want Bitcoin or anything else to take over, so they ban it, and they want a digital yen. Okay, but that has nothing.
That's for another show.
What I will do is only make it. Just think of the US dollar coin or whatever you want to say.
Okay.
It will just make Bitcoin or cryptocurrencies more easily, acceptable by the people. Okay, but the US dollar coin will be no different than a regular dollar. It just improves some of the things in which I can send it to you, or I can trade it faster, easier, and they can track it. All those things are good for them, but they will still produce as many US digital coins that they want, just like they do the dollar. And so you got to remember the long game is inflation, right? They want to continually deflate the dollar. They produce more dollars. So that means that over time, your house, your stocks, your Bitcoin, when you compare it to a deflating asset like the dollar or the US dollar coin, whatever, the value of those things go up. Okay, that's it.
So I'm gonna end it there. I know the pat. Do we have 2 seconds? You have 2 seconds? No, 2 seconds. We're over by 5 minutes.
Okay. Remember when Netscape?
Okay, let me turn it off.
When Netscape was it? Remember when I remember going into the high school library, internet just started. That was all there is. Netscape, right? Prodigy, but for a little bit. But then it was Netscape. Netscape took over. Blah blah blah.
You don't like AOL?
Will Bitcoin be the next? Yeah, well, Bitcoin be the next Netscape when Internet Explorer came in and it just fucking, sorry, and just took over everything, right? And now where's Netscape? Will another cryptocurrency come and just blow Bitcoin out of the way? I have no idea. But anyways, that's possible.
I think that's a topic for a different show, for a different week.
All right.
So, all right.
Sounds good.
I know the passion is there. It's just steaming out of us. And but it's the end of the show today. We're over about 6 minutes. So thank you for everybody that joined us this week. Again, the process, the journey that we're on, it's about information and sharing it. So if you got anything here, please leave a comment. Drop a question for Satoshi or Mr. Coleridge himself. Finance Trader Frank. it hurts to come out sometimes. But we'll see you guys next Friday. Adios.
Bye-bye.
See you, Rob.